Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome to another edition of the Grain Feed, brought to you by EverAg. This is your weekly news feed for all things grain and all things feed. Each week, we bring you updates on the markets with unique perspectives from an amazing team of analysts with the intention of helping dairy and livestock producers manage their risk. I'm your host, Jim Matthews, reporting from the Chicago office on a cloudy morning here in the Windy City. I just got back from the World Dairy Expo. There's a whole crew of EverAggers attending the expo this week. We had an awesome couple days up there. Just came straight from Madison this morning. Beautiful town, a lot of awesome farmers we spoke with. So great to be up there with all of you that we got to meet with and hang out with. So thank you very much for that and for your time. And a big thanks to the EverAg team for doing such a great job representing the firm up there. Awesome work, everybody. It's great to be back at the desk and great to have an awesome crew today. So joining me, as always, from Texas, Director of Feed Procurement, Mr. Jake Kingsley, and returning to the grain feed from Missouri, Chief Economist at the American Soybean Association, Mr. Scott Gerlt. Team, how are we today?
Doing all right this morning, Jim.
Doing great here in St. Louis. Kind of a cloudy, rainy day to give us a little needed moisture.
Yeah, excellent. I think we're having pretty similar weather here today, Scott. But Scott, it is awesome to have you back. You made an appearance. It feels like not too long ago, but I suppose it's been a good 6 months or so, maybe. So it's awesome to have you. Really appreciate you joining us today. We're going to dig into some of your insights and what's happening in the world of the soy complex here today. We'll just do a quick run through of the market. So Paige, if you would kindly timestamp the broadcast. It is Thursday morning. We've got the corn market trying to fight for that 490 level once again on December futures. We're inching very close. We're within a tick as we record here on Thursday morning. We've got December meal, that stubborn little byproduct, but now the other way. We're back down towards 370 on December meal futures. So finally have received that long-awaited break to the low end of that range for that byproduct. So excited to see some relief at board pricing for that protein. And then just looking at beans, we still have November beans under some decent pressure, trading at $12.70 this morning here at the board as we record. So lots going on in the market. So Jake, let's chat with you for a second here, bud. We've been watching the protein markets very aggressively here the last week or so, especially after the stocks report we had last Friday. We've been talking to folks about when to step in on meal. We've seen meal now come under some serious pressure. We're constantly talking about the soy complex, and you said, hey, hold on a second. I need to talk to my good friend Scott Gerlt here. And you guys had a conversation yesterday talking about some of the markets. So what should we be talking to Scott about this soy complex today?
Well, I think, like you said, Jim, futures have come down here and are retesting some lows. Basis has, of course, bounced up off of its earlier in the summer lows and is $10 or $15 a ton above those. And so a lot of folks are wondering, is this a time to get in and get things knocked out for the rest of the year? Do we just get a little bit layered in here? How does this thing look? And so I think as we step into harvest, we could, see some dips in both parts of the price complex there. But typically these are our seasonal bottoms in this marketplace. And so I guess the big question mark is, what is this new crush capacity and change in the overall soy industry with renewable diesel going to bring for the next few months and the next few years? So Scott, we kind of talked about it yesterday. In June, they came out with those revised minimum blend requirements. What does that mean for additional crush capacity going forward and for potential price forecasts?
Thanks for the question, Jake. It's a fairly detailed answer, at least if we want to kind of get into it a little bit here. The short part of it is crush is expanding, will continue to expand. It will push down soybean meal prices. The longer answer is there's a lot of contingencies going on. You're right. EPA released those final RVOs, renewable vehicle obligations, in June, which determined the minimum blending level for biofuels. If you remember kind of back when I was on before, we were talking about their proposed rule in December and how much lower it was. than what the industry could provide. So ASA and others worked quite a bit with EPA to provide them with the crush data to show really what the industry was going to do. EPA did come back and make some changes based off of that. But the changes get a little bit nuanced. So I'm going to use the analogy of buckets here when we talk about those RVOs. Think about a 50-gallon drum. That's your overall RVO. So that's how much biofuels can be blended. Then in that, you have a 5-gallon bucket, which is advanced. And then within that 5-gallon bucket, you have a couple of gallon cans of biomass-based diesel and cellulosic. So EPA increased the amount we could blend, but instead of just putting in that 1-gallon biomass-based diesel can or even that 5-gallon bucket of advanced, they put a fair amount of the biomass-based diesel in that overall 50-gallon drum. So they gave us room, but why that matters is that overall 50-gallon drum is where corn ethanol lives in the volume obligations. And so really, biomass-based diesel has to compete against corn ethanol in that. And ethanol has kind of hit the blend wall for a while and hasn't been increasing its use, so it's not really a problem at the moment. But if we do see ethanol break through that blend wall, then all of a sudden that could start to put pressure on biodiesel and renewable diesel. And so that's a fairly long-winded and detailed explanation, but it really comes down to we do have room to grow, but there are risks on that front. Initially we saw markets kind of pull back after that June announcement, but we've since seen them go back up in this space. We've seen crush margins return. We've actually potentially have some more new crush announcements. They're kind of percolating out there, not quite official yet as they're doing the background. I thought those might be dead. We may not see any more announcements after that RVO in June, but I don't think the market seems to think that there's still some more room for expansion. And we are seeing renewable diesel continue on. We've seen more plants come online. We've really seen the demand for soybean oil just continue to grow.
Okay. So you had mentioned there it's going to play a little bit with the corn market. Of course, if beans start to come in and take up acres to meet this capacity, we're going to see corn futures have to rally to compete and keep some corn acres out there. Maybe that's a little bit of an explanation for what's been going on with the relationship between bean and corn values here recently. Corn remaining rather strong, even with a very healthy balance sheet, and beans coming well off of their highs. So maybe a little bit of color to what's happening in that piece. But we've seen blend mandates come down. We've seen soy prices come down. Even soy oil has come off of its highs here in the last few weeks now. You said that it's looking like there's potentially some new crush capacity still to be added to the pipeline. What's the current pipeline look like for adding new capacity over, say, the next 6 months and couple of years? And how do you think that plays out?
Yeah, so we've seen over the past year or two over 20 announcements that would add 25+% capacity. Some of those announcements have come online, and those announcements are split between brand new plants and expansion of current plants. We have not seen the bulk of those come online yet, just because of the amount of time it takes for the construction process. So we could see a few more this year get finished out, but the big expansion really starts next year in 2024. We'd see probably close to potentially a third of that increase come online that year, next year. 2025 would be another big year, not quite as large. And there's still a few out there for 2026, but at that point, you're tailing off pretty hard. So if we're going to increase much beyond 2025, we'll probably need new announcements at that point. Like I said, there's some potentially new announcements percolating out there. We have seen one large plant that was announced pull back, the Cargill plant in southeast Missouri, for a variety of reasons. And so far, we haven't seen any official pullback. I think higher construction costs, interest rates, and the RVOs factor in. So, some of the smaller plants that have been seeking funding could have some challenges there, although there's really been no official word on pullback on that front.
So definitely this thing's going to have a little bit of a tail to it. And I think in the very near future here, folks are kind of curious, are we seeing the lows in prices here in the protein complex? Are we going to have the beans at this harvest to meet some of that new capacity? Do you have any insight on that?
Yeah, I think for this harvest, we should have plenty of soybeans available, even with a little less production overall. We export about half of our beans and crush the other half. If you look at USDA's projection, they have exports falling just a little bit and crush going up. So I think we can easily shift some of that, especially whenever you consider that Brazil's had a record harvest this year. They've provided a lot of beans to the world market. And we're also having some Mississippi River transportation issues with the low water levels, which is potentially going to delay some of our exports anyway. So I think the supply is there. And I think we'll potentially see, I'm confident we'll see crush levels go up this fall. Yes, some of the new crush capacity, absolutely. But we've also just seen low crush numbers through the summer, a lot lower than we would have expected. We were hitting records for months at the beginning of the year through the early season, but then they dipped down quite a bit for multiple reasons, such as just maintenance. The hot weather we had this summer actually slows down crush, and just tight supplies this year. So I think whenever we start seeing soybeans coming in out of the fields, I think we'll see those crush numbers pick up quite a bit. We should start to see more soybean meal available on the market.
Scott, in terms of the, you referenced the EPA, draft proposal that we saw at the end of last year, and we'd seen a lot of big market swings, following that draft proposal release, and you referenced that. And Jake, obviously, we talked about that a lot, watching markets at the end of last, calendar year. Are there any other upcoming dates that we need to worry about in terms of when a new proposal might be issued, or when the EPA has to ultimately renew these mandates, and would the potential, government shutdown that we narrowly avoided, but now there's a new deadline looming, and things seem to be somehow a bit more chaotic in Washington at the moment? Are there any other big dates we need to look for in that regard?
Yeah, great question. And I don't have a hard date. There are a lot of things going on that are going to matter, but we don't know the dates for all of those. So these RVOs, these blending levels, are set for the next 3 years by EPA. But there are bills in Congress right now that could alter some of that, or how some of this works, that could have an impact. There is no specific date on that because they're just proposals at this point. So they may never get to the finish line. Another big thing we're watching pretty closely are some of the tax credits, especially for sustainable aviation fuel. Hopefully that one will be coming out in the next few months. And that may not have a huge impact in the near term because it takes a while to build out capacity, but that's an important one to watch. And the other thing I would say to watch, although we don't have a specific date, is California. They're looking at changing some of their policies on some of the biofuels, which could have an impact in this market as well. Their staff are going through that. They're holding listening sessions. So we don't have a date on that for when they're going to make a decision, but it could be this year, early next year.
Okay, excellent. Thank you for that. And, Jake, when speaking with Scott, we think of these potential swings in the markets, and obviously something as big as that EPA proposal came out. I mean, that was a huge mover. But as Scott referenced, earlier in the show, that long term, one would think we are going to continue to crush more and more beans. We're going to continue to expand capacity to do so. And then, as Scott mentioned, we then, in theory, should have more protein available here in the U.S. as a result. Because I think part of what Scott has, discussed and is studying continuously is that this drive for the soybean capacity is very soybean oil driven, right? And not protein to feed animals driven. So long term, we'd like to keep that in mind, that there should be more supply down the road and more availability for protein down the road. But Jake, lately, it has felt like, from a pricing perspective, at least on the physical side, that there's still some concern for that supply. And again, we've seen the board pricing find some relief, thankfully, to our dairymen over the last week or so. But from a basis standpoint, Jake, any relief there on pricing?
Well, I think, like you said, Jim, futures have come down here and are retesting some lows. Basis has, of course, bounced up off of its earlier in the summer lows and is $10 or $15 a ton above those. And so a lot of folks are wondering, is this a time to get in and get things knocked out for the rest of the year? Do we just get a little bit layered in here? How does this thing look? And so I think as we step into harvest, we could, see some dips in both parts of the price complex there. But typically these are our seasonal bottoms in this marketplace. And so I guess the big question mark is, what is this new crush capacity and change in the overall soy industry with renewable diesel going to bring for the next few months and the next few years? So Scott, we kind of talked about it yesterday. In June, they came out with those revised minimum blend requirements. What does that mean for additional crush capacity going forward and for potential price forecasts.
Okay, good deal. Appreciate that, Jake and Scott. We really appreciate you joining us and your insights. I think before I let you gentlemen go, we're just going to keep it market focused, bold predictions. We're going to borrow from the Dairy Download from Phil and Kathleen. We're just going to ask for 2 numbers, bold predictions for you guys. It's going to be soybean based, and we're going to look at the ultimate final print for beans. And Scott and Jake, we had that stocks report come out the end of last week, maybe altered the landscape a little bit for beans, albeit, let's say slightly, but it still did enough to cause a big shift in futures for both beans and meal by having maybe a little bit more cushion as we head into this harvest. Just a little bit. Things are still tight, but just a little bit more. So I'm going to ask you, gentlemen, for your bold prediction on not this WASDE, but the final print on soybean yields come January. Scott, final print soybean yield, bold prediction.
Bold prediction. I think we're gonna be around. I know we're currently around 50. I think we could drop a little bit from there, but I don't think we'll go too much lower. Is my bold prediction.
Do you think we'll be below 50?
Oh, that would be a very bold prediction, wouldn't it? if you look at conditions, they would indicate, crop conditions based model would indicate yes. I'm hesitant to go too much lower than where we are now. I mean, everything's spotty and some of the reports are good, but I think around 50 or really close to that's going to be my prediction.
Yeah. And I'll say, Scott, being up in Madison this week at the World Dairy Expo, and granted, it's a lot of Wisconsin folks talking about how great their beans look. So we got folks coming up from other states that were saying that their soybeans don't look so hot. But the Wisconsin folks, really from all parts of the state, were very, very happy with initial yields on how their beans are looking. So, yeah, they might argue we were going to stay above. I think guys in other parts of the Midwest would argue for below. Jake, bold prediction, that final print on soybean yield.
I think we're coming in at 49.3. We're going to hit it.
Look at you. That's fantastic. Jake, is that pretty bullish?
I think it's bullish until we get a crop out of South America. Yeah, we got to have it.
That's exactly right. And as you said, Jake, we're still in that drought for the Argentinian friends, entering its now 3rd year, really, not getting that El Nino precip relief everybody had been hoping for. So impacting potential exports. Obviously, everything we've discussed today is impacting our crush demand in the U.S. So the second bold prediction, before I let you guys go, is the final print on ending stocks. What will our final ending stocks number be for soybeans, Scott?
I'm curious what Jake has to say on this one.
That's perfect. Jake, you're on the spot.
I think that they're going to come in and like you said, this summer they slowed down crush a little bit due to supply and price. I think we bottom out somewhere. Call it 185 million bushels.
Ooh, sub 200.
I don't think Jake's unreasonable there. I was going to say 200-ish. I mean, it's possible we could top the crush numbers that are currently in the WASDE. I think we definitely have the potential to do that. So the question becomes production, which Jake and I both think has a chance to go down.
Yep. And
then exports, which are likely going to start slow because of river levels. So that's the wild card in my mind. But I think 200-ish is where I'm at. They're currently at 220. So
okay.
I'll say 200.
Excellent. Yeah, and we're going to see some potential revisions here on this upcoming WASDE because of that stocks report, right? So the carry-in number will fluctuate slightly. But as you said, Scott, if we maintain and or expand crush demand, it'll kind of be the export side of things. That'll be the wild card. And if we can hopefully maybe rejuvenate some river levels before our own export windows close, that would help, along with the facts that maybe the South Americans might not have this potential record-breaking crop that the USDA is currently projecting them to have. You also said that, Jake is not being unreasonable there. But fair to say he can be unreasonable though in general. So I think we can all agree on that. Gents, I really greatly appreciate your time today. Very well done, Scott. Always a pleasure to speak with you and have you on the show. Very much appreciate your insights. Jake, excellent work. as always, bud. Team, thanks to everyone. Corey and the Evrag Insights crew, great work. Thank you to Paige for production magic. And thank you to the viewers for watching the Grain Feed. Contact information is on the screen. We greatly appreciate your feedback. That is all for today. We'll see you next time on the Grain Feed.